If you're 65 or older, there are 3 separate deductions stacked on top of each other that could lower your taxable income by thousands of dollars, and one of them is brand new. Today, I want to walk you through exactly what they are, how much they're worth, who qualifies, and how to actually claim them when you file. This is general education, not a sales pitch, and by the end you'll know enough to either handle this yourself or ask your tax preparer the right questions. Let's start with the basics because the layers build on each other. Layer 1, the regular standard deduction. Every taxpayer gets a standard deduction, an amount the IRS lets you subtract from your income before it's taxed. No receipts required. For the 2026 tax year, the return you'll file in early 2027, that base amount is $16,100 if you're single or married filing separately, $32,200 if you're married filing jointly, and $24,150 if you're head of household. About 90% of taxpayers use the standard deduction rather than itemizing, so this is the starting point for most people. Layer 2, the additional standard deduction for age 65 plus. This one has been around for decades. If you're 65 or older by the end of the tax year, you get to add an extra amount on top of the base standard deduction. For 2026, that extra amount is $2,050 if you're single or head of household, or $1,650 per qualifying spouse if you're married. So a married couple where both spouses are 65 or older gets an extra $3,300 combined. If you're also blind, you get that same additional amount a second time. The IRS defines legal blindness as 20/200 vision or worse in your better eye with corrective lenses, or a field of vision of 20 degrees or less, certified by an eye doctor. You claim this one simply by checking a box. On Form 1040 or Form 1040-SR, there are checkboxes for "were born before January 2nd, 1961. For the 2025 return, the exact date shifts each year based on the filing year. And for blindness, check the box and the software or the paper worksheet adds the extra amount automatically. If you've been filing your own taxes and didn't realize this box existed, it's worth going back and checking a past return, though amending old returns has its own rules and deadlines, so that's a good question for a tax professional if you think you missed it. Layer 3, the new enhanced senior deduction. This is the one that's actually new, and it's a provision of the tax law passed in July 2025. For tax years 2025 through 2028, if you're 65 or older, you can claim an additional $6,000 deduction, separate and on top of the 2 deductions I just described. If you're married and both spouses are 65 or older, that's $12,000 combined. A few important details on this one. First, it phases out as income rises. The deduction starts shrinking once your modified adjusted gross income passes $75,000 for single filers or $150,000 for joint filers, reducing by 6% for every dollar above that threshold. Second, unlike the regular age-based deduction, this one is available whether you take the standard deduction or itemize. So even if you itemize your deductions, you don't lose the $6,000. Third, if you're married, the IRS requires you to file a joint return to claim it. Married filing separately doesn't qualify. Fourth, you'll need a valid Social Security number to claim it. And this deduction is temporary. Right now, it's only written into law through the 2028 tax year, so don't assume it continues automatically after that. To claim it, you'll use a form called Schedule 1A, Additional Deductions, which the IRS introduced specifically for this. The amount gets calculated there and then carried over to your Form 1040 or 1040-SR. If you use tax software, it should walk you through this automatically once you enter your birth date and income, but it's worth double-checking that Schedule 1A actually shows up in your return, since it's a new form and not everyone's software prompts for it clearly in its first year. Putting the numbers together. Here's what this can look like in practice. A single 65-year-old with no other deductions and income under $75,000 could stack the $16,100 base standard deduction plus $2,050 for the age-based additional deduction plus $6,000 for the new enhanced senior deduction. That's $24,150 of income that isn't taxed at all, just from these 3 layers. A married couple where both spouses are 65 or older, filing jointly with income under $150,000, could see $32,200 plus $3,300 plus $12,000, a combined $47,500. That doesn't mean you get that amount back as a refund. It means that much of your income is shielded from federal income tax before your tax bracket is even applied. The actual dollar savings depends on your tax bracket, but it's real money either way. A word on Form 1040-SR. The IRS also offers Form 1040-SR, an optional version of the regular 1040 designed for seniors. Same information, same schedules, just larger print and a standard deduction chart built right onto the form. Using it doesn't change your deduction amount, it's just easier to read. You're not required to use it, but if you file on paper, it can make the process simpler. One more thing worth knowing: the credit for the elderly or disabled. This is a separate tax credit, not a deduction, and it's been around a long time. It's aimed at lower-income seniors and people with disabilities, and unlike a deduction, a credit reduces the tax you owe dollar for dollar, rather than just reducing your taxable income. It has fairly strict income and Social Security benefit limits, so it doesn't apply to everyone, but if your income is modest, it's worth asking your tax preparer whether you qualify, or looking up IRS Schedule R yourself. How to actually take action on this. If you prepare your own return using tax software, make sure you've entered your correct birth date, since that's what triggers all three of these deductions. Look for Schedule 1A in your forms list to confirm the new $6,000 deduction is included. If a professional prepares your return, ask them directly, are you applying both the age-based additional standard deduction and the new enhanced senior deduction? It's a reasonable question, and a good preparer will welcome it. If you want to read the source material yourself, the IRS has a page called Check Your Eligibility for the New Enhanced Deduction for Seniors on irs.gov and Form 1040 Instructions. Explain the regular additional standard deduction in detail. The IRS's general phone line is 1-800-829-1040 if you have specific questions about your own account or a notice you've received. I want to be clear about something before we wrap up. This is general information based on current federal tax law as of mid-2026, and it's meant to help you ask the right questions, not to replace advice from someone who can look at your full financial picture. Income limits, phase-outs, and filing status rules can affect your specific situation in ways a general video can't cover. Before you file, it's worth confirming these numbers with a tax professional, a trusted tax prep service, or directly on irs.gov, especially since the enhanced $6,000 deduction is new and some software may still be catching up to it. If this was useful, the best next step is simple. Check your own last return or your current year's software to see whether all three layers are actually being applied to you. That single check could be worth real money.